But I want to bring in the chief investment strategist of the Oxford Club, Alex Green. He's in Baltimore, where the group is headquartered. I know Alex a little bit because we did this event and I interviewed him and things like that, but I wanted you to hear directly from him. And I also want to interview him so you know the ups and the downs of this whole thing. Now, first of all, Alex, my intro, you got any problem with that?
Not at all.
Okay.
Success is never something you should have to apologize for, Bill, and you should, and neither should anyone else who's earned their money legally and fairly.
All right, but a very important point in my intro to you is you could lose it. If you listen to Alex, you could lose it because Alex isn't God. All right, he's doing the best he can do, and as I pointed out, you've made me money. But there were some stocks that I bought that you said were good that didn't pan out. So how do you allay the fears? How do you allay the fears of people who've worked really hard for their money and they don't have all that much, all right? But they want to grow it. But how do you allay their fears?
Well, there's one thing they need to start thinking about, and that is if they hope to be financially independent or to retire comfortably someday, they have a great enemy out there, which is the creeping inflation, which is destroying your purchasing power. Now, if you're an investor or if you're a saver, you have some essential choices. You can invest in cash in the bank and earn 0.05%, or you can invest in bonds, which pay less than 2%, or you can invest your money in the stock market. And a lot of people seem to think the stock market is just a big casino. And quite frankly, from hour to hour and day to day, it can be a casino. Stock prices in the very short term are almost totally random. That's why day traders often end up going back to their day jobs, because it's not really investing, that's just gambling. But there's a great sorting process that goes on over time in the stock market. And Warren Buffett's mentor, Benjamin Graham, famously said that in the short term, the market is a voting machine, but in the long term, it's a weighing machine. And what it weighs is corporate earnings, profits. And what I would say to allay people's fears is, you can go back through history and look at any stock in the market, and you will not find a single example of a company that increased its sales and earnings quarter after quarter, year after year, and the stock didn't tag along and go up too. And contrarily, you will not find a single company that lost market share, had declining earnings and falling profits, that the stock went up. So if you want to invest in the stock market, you need to focus on real companies with real products, growing profits, and that's where you can put your money to work safely.
And that's what but the regular folks can't do that. But that's what you do. You study and you recommend. Now, one of the criticisms I have of Oxford, and again, I've been a lifetime member and I pay attention closely to it, is that you and your cohorts recommend a lot of stocks. There's a lot of them there. And so the people are going, well, which one should I get? I can't get them all.
Well, in my newsletter, the Oxford Communique, there are probably 24 stocks. So I'll recommend the best of the best that I find, and we ride them as long as they're trending up. And as you know, Bill is a longtime subscriber. We use what's called a trailing stop. That means if the stock is going up, we have an order to sell trailing behind it. And when it finally peaks and starts coming down, we get out. So we're not just hoping and wishing that the stock market goes up or that a company's fortunes continue to improve. So we're being intelligent risk takers. We're not just hoping and guessing.
And one of the benefits of this technology stupid thing here is that you can flash a sell sign very quickly to the people who are subscribing to your service. So they know that the moment you get out, they get out. And I found that to be an advantage, because when I hear you say, sell, I sell. But it's still, when you lose money, damn Alex Green.
Well, Bill, you're right about that, but you should also remember that you could put all your money in Warren Buffett's Berkshire Hathaway today, and you might theoretically never get your money out of it. I mean, that's just the nature of stock investing. If you want guaranteed returns, buy treasury bills, invest in CDs or money markets. You will earn an ultra low return, but you're safe. Your principal will be entirely safe.
Back to you. But I think that most people watching us right now, Alex, they want to have a comfortable retirement. All right?
Right.
So they want to have enough money to travel, to give some money to their children and grandchildren, to pay any medical bills that may come up, which is something Congress really has to deal with. And they want, to grow their money so that after they're out of the marketplace, they don't have to worry. And that's why I liked your service, because you're geared to a lot of them.
Right. People need to remember that when you own a stock, you don't have a slip of paper or an electronic blip on a screen. You own a fractional interest in a thriving business. And you have to also think, if you're going to get from here where you are to the kind of retirement you want or the kind of net worth you want, how are you going to do it? There are three things that determine every investor's return: the amount of money they invest, their annual rate of return after expenses, and the length of time they let it compound. So you want to put as much away as you can, as soon as you can, and let it compound as long as it can. But you also want to have high returns, hopefully market-beating returns. And for that, you need an edge. And I have spent 34 years as a portfolio manager and a research analyst and a financial writer. And I pour all of my experience, like you, Bill. I'm independently wealthy. I don't have to be doing this, but I enjoy sharing what I've learned and helping other people achieve a level of financial success.
All right. So now you and I have participated in the Great American Wealth event. What are people going to see when they go and take a look at it, and how much is it going to cost them?
Well, they're going to see you and me talking about, first of all, the Trump economy. We've got the longest economic expansion in history. Tax cuts and deregulation have helped that. Unemployment at a half-century low. Wages at a 10-year high. Lots of good things happening, and that's showing up in the stock market. So we'll talk a little bit about what's happening in the market. We'll talk about the inequality that exists in our country today. It's a shame, really, Bill, that while we have a record number of millionaire households, according to Spectrum Group, a research organization, there are 11 million millionaire households. Those are households with investable assets, not even including home equity, of $1 million or more. And yet, 80%, almost 80% of Americans live paycheck to paycheck, according to the Federal Reserve. So those people need to change their path, need to change what they're doing.
I'm going to talk about that in a little while. One more quick question. Are you worried about the socialists taking over?
Winston Churchill said that inequality is the vice of free markets and shared misery is the vice of socialism. I really can't imagine how anybody who understands the history of socialism or looks at Cuba or North Korea or Venezuela can think that's the direction we need to move in.
It would devastate the economy, and we'd go into a depression, in my opinion, not a recession. All right, Alex Green, the website again is Great American Wealth Event, one word, greatamericanwealthevent.com. Check it out, and if you piques your interest, then you can go watch it. How much is it going to cost people to watch it, Alex?
Well, that depends. There's different levels depending on what people want, but there's a number of choices there.
All right, that's good. They can get the menu and they can decide for themselves. We appreciate it, Alex. We'll talk soon. Thank you.
Thanks for having me, Bill.
Okay.
All right.